In this video, I'm going to journalize transactions under the Perpetual inventory system. Before that, let me first give you the pro forma for the entries. If you are the buyer and you are buying, instead of debiting purchases, because that's for periodic, you will debit merchandise inventory, and then you credit cash or accounts payable. If you are the seller, you will debit cash or accounts receivable depending on the problem, and you will credit sales. And aside from that entry, you will debit cost of sales and credit merchandise inventory. Okay, so the cost of sales here is a nominal account, and its normal balance is debit. Okay, and then the amount that you will write here would be the price, meaning the amount with the markup, and then the amount that you will write here would be the cost, meaning the price without the markup. For returns, allowances, and memo, you will just reverse the entry for the buyer. Okay, so you will debit cash or accounts payable and credit merchandise inventory. And for the seller, you will reverse both entries, but instead of debiting sales, you will debit sales, returns, and allowances. And then for the amount you will write here would be the price, and here you will write the cost. For the freight, it's the same. You will just have to change the account title freight in to merchandise inventory. Then for payment or collection within the discount period, it's the same. You will just have to change purchase discount to merchandise inventory. So for the seller, it's the same. Then for payment or collection beyond the discount period, it's the same. Okay, so just to summarize the differences, for buyer's point of view, you will have to change purchases, purchase returns and allowances, purchase discount, and freight in to merchandise inventory. And that's it. And for the seller's point of view, it's the same. You will just have to add the entry for the cost of sales. Okay, and that's the difference. Now we jump to the transactions. January 1, purchase merchandise on account, 100,000, terms 10%, 10%, 210, and 30. So we journalize debit, merchandise inventory, credit accounts payable. For the amount, we don't write 100,000 because we have trade discount. So that's 100,000 times 90% times 90%. Answer is 81,000. Next, paid freight on merchandise purchase. So you are the buyer and then you are paying the freight, so you will debit freight in. But since you are doing this under Perpetual, you will debit merchandise inventory. Debit merchandise inventory, credit cash. For the amount, it's 5,000. Next, return defective merchandise bought on account. So you will just reverse the entry. Debit accounts payable, credit merchandise inventory, 10,000. Next, paid account in full on January 11. So 11 minus 1 equals 10. You are able to pay within the discount period, so you get the purchase discount. But instead of using the account title purchase discount, you will use merchandise inventory. So on January 11, debit accounts payable. So you have 71,000 debt remaining. Then you will credit cash. Then you will credit merchandise inventory instead of purchase discount. To compute the discount, get the initial amount of the obligation minus the returns. So you have 71,000 times the applicable rate, so 2%. The answer is 1,420, leaving you with 69,580 to pay. Okay, what if you paid beyond the discount period? Let's say on January 12, that's beyond the discount period. So on January 12, you will just debit and credit the same amount, 71,000. You will not pay less because you were not able to avail of the purchase discount. February 1, sold merchandise on account, 20,000, cost is 10,000, and then you are given the terms. Okay, so let's journalize February 1. Debit accounts receivable, credit sales. We will not write 20,000 because we have trade discount. So let's deduct the trade discount. 20,000 times 95% times 95%. Answer is 18,050. And we will also write the cost. Debit cost of sales. And then credit merchandise inventory. Then write the cost, 10,000. February 2, paid freight on merchandise sold, 500. So on February 2, you are the seller, and then you pay the freight, so you will debit freight out. Then the problem says paid, so you will credit cash, 500. Next, February 3, received defective merchandise sold on account. Okay, so you will reverse the entry on February 1. But instead of debiting sales, you will debit sales, returns, and allowances. Credit AR, debit merchandise inventory, and credit cost of sales. For the first entry, we write the price. And then in the second entry, we write the cost. Okay, next. Partial collection, so you're able to receive from the customer. So that's on February 4. Debit cash, credit AR. That's 2,000. Next, February 11, collected in full. So you refer to the cash discount. If the buyer was able to pay within 10 days, he or she gets 1% cash discount, and the buyer is given a maximum of 30 days to pay. Okay, and the transaction happened on February 1. So to compute the number of days, 11 minus 1. So 10 days, the buyer availed of the cash discount. So what's your entry as the seller? On February 11, you will debit cash for the collection. And then you will also debit sales discount to decrease your collection. And then remove your receivables from that customer. Okay, so for the receivable, let's compute 18,050 minus 1,000 minus 2,000. Okay, so for accounts receivable, it's 15,050. And to compute the cash discount, you only deduct the returns. So let's start again. 18,050 minus returns, 1,000. We don't deduct the partial collection because it's not logical. So our basis is 17,050. So I'll write it here, 17,050. And then the applicable rate is 1%. Answer is 170.5. This is the sales discount or the cash discount. So given that discount, the seller only gets to collect 14,879.5. Okay, what if the buyer pays beyond the discount period? What's the entry of the seller? Let's say on February 12. So the entry would be debit cash, credit AR, 15,050. Okay, and that's it for this video. Thank you.